It is now my pleasure to turn today's program over to Dewey Norwood. Sir, please go ahead.
Michelle, thank you very much for that kind introduction. Certainly very excited to have an opportunity to work with you and with Kavita today on what I hope is going to be a very engaging conversation as we talk about a guide to repaying your student loans. Very excited. Team to be reporting to you today from Charlotte, North Carolina. Senior Vice President within our Talent Acquisition and Strategy and Targeted Programs team, and really honored and privileged to be able to be on this conference call with everyone here for today. I really hope that over the next 58, 59 minutes or so, you leave this call with some good information that's going to help you along your journey as you're addressing any student debt that you have incurred or even student debt that you may potentially incur as you're heading off to your respective colleges and universities. As we go through kind of the runner program with things, certainly want to congratulate you students on returning back to campus. We know some folks are doing it virtually and others are participating in a hybrid model, maybe with in-class days, and then other times where you're having to join remotely via Zoom or other technology. And then others of you may have an entire virtual semester. And so no matter how you are joining, whether you're there on campus or whether you are participating in a virtual perspective, please, we want to congratulate you on heading back to campus and just encourage you to continue working diligently. Work hard, do everything you can to continue to be successful throughout your classwork. Certainly want to remind folks that this is a safe space for us to be able to have very candid dialogue and questions. So you'll hear me mention several times today that we want you to utilize the Q&A feature. This is the best way to communicate with our wonderful presenters and our partners that are going to be sharing, I think, some really great information with you today. So please utilize that Q&A feature and just know that you're submitting those questions confidentially for our team to address. Also, we're going to be sharing some information on the next slide about a press release specifically related to Wells Fargo's commitment to diversity and inclusion. So we'll talk about that in a little bit greater detail in just a moment. But let's talk about some of the topics for today. This is an open group discussion around the topic of student debt. We've seen the factors, $1.5, $1.7 trillion of student debt that's out there. We're going to talk about some of those pieces today. We're also going to talk about repayment considerations. There are lots of things that you may need to consider and some things even that you may need to customize relative to your specific experience. And so we're going to talk about those areas as well. We're also going to give you some other factors to consider. So we encourage you really to just take copious notes here throughout the course of today's presentation. As we get to the end, we're certainly going to share some resources and reminders with you. I can tell you I have a number of links that we're going to push throughout the presentation today. So when those links come up, if you have your pop-up blocker on, maybe turn that off initially, or when they pop up on your screen, go ahead and save those down or bookmark them because they are important pieces of information that we want you to key into. Of course, we're excited about the webinar series coming back again in 2021. We'll talk more about that. And then, of course, we want you to keep the conversation active with us by utilizing the hashtag WFCBeyondCollege. Again, hashtag WFCBeyondCollege is a way that you can share this information from a social media perspective with us. We'll also spend just a moment or so talking about the Student Impact Scholarship as well and some important action items associated with that. I referenced this one a little bit earlier. Very, very significant communication and press release that went out yesterday from our CEO, Charlie Sharp. Charlie actually shared some comments specifically reinforcing our firm's commitment to diversity and inclusion. I'm actually going to launch that link here in just a moment. Scholars, I'm going to ask you to please examine the information that's here. I want you all to hear directly from what Charlie is sharing, and you will see his commitment and our firm's commitment to and building on diversity and inclusion. So we just encourage you to take a look at that. And then what I will say is that if there are additional questions that you have relative to the press release, you all can certainly feel free to connect with me. You can find me on LinkedIn very, very easily, and we can certainly have a broader conversation. But I think that this press release speaks well to our firm's commitment and also Charlie's commitment around diversity and inclusion within our institution. So please take a look at that again if that link comes across for you here over the next few moments or so. I want to pivot now and just remind you, scholars, about the Student Impact Scholarship. For those that were on with us for last month's webinar, we introduced this one to you. It is up and running right now. You literally have the opportunity to apply between now and October the 2nd for the Student Impact Scholarship. Some things to note. This program is specifically for undergraduate students and will give you an opportunity to receive $5,000 of scholarship, no matter your concentration or your major, for the second semester. So please note, the expiration date or the final date to apply on this is October the 2nd, so that's not too far from now. You need to go ahead and get those applications in if you want to be considered for this wonderful program. We are getting lots and lots of applications in, so we just encourage everyone on the lines to go ahead and get connected into this wonderful scholarship program. I'm going to push a link over to you that will tell you a little bit more about this particular scholarship, and then on the bottom of that, you'll actually see the place where you can actually start your application to either submit in person or, very uniquely, to be able to submit by video. So please take a look at SIS or the Student Impact Scholarship. Scholars, final reminder here. Please remember to utilize the Q&A feature. This is the best way to have an active dialogue and an active discussion throughout the course of today's meeting. So please utilize those resources there, submit those questions to us, and then in turn we'll make sure that we answer all of those wonderful things. With that said, I want to quickly introduce our wonderful guests here today, both Casey Galindo and Sylvia Jones. These are trusted partners of ours that work hand in hand with college campuses all around the U.S., helping students along their higher education journey and also helping them come up with ways to actually pay for their college. And so, Casey, we're excited to have you on. Sylvia, we're excited to have you on. And in a moment, I want to give you all an opportunity to kind of share a little bit of your opening comments. But I also wanted to share, Casey, with you and Sylvia some exciting numbers. You know, we always keep score relative to the number of participants. We have over 280 students who have registered to be a part of today. So that's really, really exciting news there. And you guys know me. I always look a little bit closer at the numbers. Our top referral source for today is the Hispanic Scholarship Fund. And then also the Thurgood Marshall College Fund came in second place there with the most referrals. And Casey and Sylvia, I think this is a new one. The University of Nebraska at Omaha actually referred the highest number of students to our webinar here for today, with our wonderful North Carolina A&T right up the street from me in Greensboro coming in second place. So some exciting numbers there, Casey, some exciting numbers there. Sylvia, excited to hand the reins over to you all for our discussion today. And scholars, as I end my comments, you know, you have on the phone lines with you today individuals with nearly 50 years of industry experience. Please utilize their background, their expertise, so you can help to customize a plan that's going to help you address any student debt that you've incurred. So Casey, Sylvia, honored to have a chance to work with you all today. We got 51 minutes to get it all in, so I'm going to hand the reins over to you all, my friends, from here.
Perfect. Thanks, Dewey, and for that great introduction. I know Sylvia and I are really excited to be here with all of you today on our session around a guide to repaying student loans. As Dewey had shared, you know, we're going to go through a lot of information today, so if you do have questions for us, please feel free to utilize the Q&A button and submit those questions. We want this to really be an open dialogue. I know for myself, I've had student loans, so I'm here to tell you that you can pay them off. I had a good number from college, and I did pay them off and learned a lot along the way. So today we hope a lot of this information will be able to provide you some insights as to, you know, what you can do as a borrower of student loans, or if you're interested in exploring student loans. So if we go to the next slide, what we're going to cover in our session today is we're going to talk about what to expect as it relates to repaying student loans. We'll walk through student loan repayment plans and options. We'll talk about student loan consolidation options. And then we'll finish up by reviewing some resources that you might find helpful. And then, of course, we'll definitely dive into all of those questions. So again, please feel free to put your questions as we're going through this information in the Q&A. And Sylvia and I will be happy to provide our insight, our knowledge, and we're very excited to be here today. So let's go ahead and get started into the information. So we're going to start with talking about what to expect. So there is going to come a time when you will actually begin repayment on your student loans, and that time typically comes after you graduate, leave school, or drop below half-time attendance. So let's go ahead and go through on the next slide some of the responsibilities you have as a student loan borrower. Now, there are some responsibilities that you have as student loan borrowers when it comes to paying your student loans, and those will include paying your loan as agreed based on the terms of your loan agreement, repaying the loan even if the bill is not sent. Now, many of the loan servicers or loan providers will offer online portals that can really help you to manage your student loan payments. And you may want to consider signing up for those portals. It'll definitely help you to keep track, know when payments are due, know how much is outstanding on your loans. Next is going to be to open and read all mail and email correspondence. Now, anytime you take out a loan, you should have received correspondence from your loan servicer or lending institution about that student loan. You may want to consider, especially when it comes to email, you may want to consider adding the loan servicer or loan provider to your contacts so that if they are sending you any emails, they won't go to your junk mail. Lastly, keep your loan servicer or lending institution updated at any time if there are changes to your information, such as changes to an address or email address or any other changes. You want to make sure that the correspondence they're sending to you, that you receive it. Additionally, if you experience any difficulties once you are in repayment, you'll definitely want to make sure to contact your loan servicer or lending institution to let them know what's going on and to really discuss some of the options that you'll have available. So now as we move to the next slide, we are going to discuss information around when your first payment is due. So in looking at that a little bit deeper, keep in mind that when it does come to student loan repayment, if you've taken out multiple loans, maybe you took one out every year that you've been in school, when you actually go into repayment, your loan servicer or loan provider will combine all of those loans into one bill. So you would be looking, for example, if you had federal student loans and you took one out each year, once you go into repayment, you're going to get one bill for all of those loans. So let's go ahead and talk a little bit more about when the payment is due. So we'll start at the top with the federal direct loans and most private loans. For your federal direct loans, which include both your subsidized and unsubsidized loans, you will begin repayment 6 months after graduation, dropping below half-time attendance, or if you had to withdraw from school for any reason, 6 months from that last date of attendance. If you have private student loans, your repayment date will actually depend upon your loan provider. Most private loan providers will provide you with a 6-month window after graduating or if you had to withdraw from school before you go into repayment. You may also find that some private student loan lenders may even allow you to be enrolled less than half-time. It's really going to depend on who you took out your private student loan with. So you'll want to make sure to check with your loan provider or loan servicer for specific information with regards to the private student loans and when you'll enter repayment. Now for those of you, for those scholars who are on the call and who may have had a Perkins loan, you will actually have a 9-month period after graduating, dropping below half-time attendance, or if you had to withdraw at any point before you go into repayment. Now, for those of you who maybe had parents that took out a Parent Plus loan, on a Parent Plus loan, they would have gone into repayment after the loan was fully dispersed. But parents do have the ability to reach out to the loan servicer for more information about deferment of those Federal Plus loans. And lastly, for our graduate professional scholars that might be on this call, if you had a Graduate Plus loan for your graduate or professional studies, repayment is actually going to align with your federal direct loans. So you'll actually go into repayment 6 months after graduating, leaving school, or dropping below half-time attendance. So next we're going to talk a little bit more about loan servicers on the next slide. Now, before your loan enters repayment, you should be contacted by your loan servicer. So the loan servicer is actually going to be used on behalf of the lender to collect the payments, to answer any questions that you might have, and to perform administrative tasks. For example, the U.S. Department of Education is the lender for your federal loans, but they will contract with the servicer for the collection of those payments when you have questions and performing other administrative tasks. For your direct subsidized and unsubsidized loans, to give you an example of a loan servicer and what we're talking about here is some of you may have received correspondence from entities such as Fed Loan Servicing or Great Lakes or Nelnet or Navient. Those are examples of loan servicers. So they would be the ones who are sending you information about your loans. Now you can find a whole list of these loan servicers on the federal student aid site. And so you would need to go to studentaid.ed.gov to see a full list of the federal loan servicers. So again, they're going to be contacting you every time that you take out a loan. Again, if you have a federal student loan, you are taking out the loan through the Department of Education. However, they do use the loan servicers for those collection of payments, for answering questions that you might have, and other administrative tasks. If we have any students who borrowed private student loans, you'll receive communication either from a private student loan provider that you took your loans out with, or you're going to receive information from that designated loan servicer. So let's discuss on the next slide, how exactly do you find out who your loan servicer is if you don't already know? So to determine your federal student loan servicer, you can actually visit the National Student Loan Data System, or NSLDS for short. I do want to point out, because you will see here a link on the slide, and that was just updated, so there is a correction to the link. The new link is going to be nsldsfap.ed.gov. And again, they'll go ahead and push that link out to you, but just want to share again, the link for NSLDS is nsldsfap.ed.gov. This is going to be a really great resource because it's going to provide information about your loan servicer. You'll see contact information for that loan servicer. You will see the different types of federal loans that you took out while you were in school, where you took out those loans. It will have information about interest rates, the type of loan, the current status of the loan. So it'll be a really great resource for you to find out information, especially if you're not sure who is servicing those federal student loans. You'll be able to access NSLDS to get all of that information. Now, if you borrowed a private student loan, you can definitely, and you're not quite sure who that loan servicer is, or maybe you haven't seen the paperwork come through from them, you can always check your credit report for information about who is servicing those loans. So you can check the annual credit report website and request that and get information about your private student loan servicer if you did take out private student loans. So let's go ahead and move on to discussing postponement and repayment options. So we know that from time to time, borrowers may find that they need to postpone their payments. Now, both federal and private student loan servicers will have a number of different solutions to help you with any of those needs that might come up when you're in repayment. So what we'll do first is we'll start with talking about the grace period. So a couple of slides or earlier in this presentation, I talked about when loans go into repayment. And I referenced a 6-month period before you enter repayment on your federal loans or a 9-month period on your Perkins loan. That period of time is actually referred to as the grace period. Now, the grace period is going to be a set period of time after you graduate, leave school, or drop below half-time enrollment before you're actually going to go into repayment on your student loans. Next is going to be, what we're going to talk about are going to be deferments and forbearances. Now, the information that I'm going to be sharing specifically to deferments and forbearances is going to apply for your federal student loans only. Now, deferments and forbearances are not always going to be automatic, so what you'll want to make sure to do is contact your loan servicer to find out, what paperwork may need to be submitted, if any. So let's go ahead and start with the deferment. So the deferment is going to be a period of time in which the repayment of the principal and the interest on your loan is temporarily postponed. It's important to note that you will not be responsible for paying accrued interest on the subsidized portion of those federal loans and Perkins loans during most forbearances. Now, you will remain responsible for the interest that accrues on the unsubsidized portions of your student loans, and if you took out, for example, the PLUS loans for graduate professional studies, you'll also be responsible for that interest. Again, any accrued interest on those unsubsidized portions will accrue, and it will be capitalized after approved deferment periods. You do know you can make the interest-only payments if you choose to do so. Now, some examples of when you may request a deferment can include things such as going back to school. So when we have students, you are completing your undergraduate studies and thinking of going back to graduate school, you can look at deferring your loans while you're doing your graduate studies. Other examples can include economic hardship or unemployment deferments as well. Your loan servicer is definitely going to be able to provide you more information about those options, so you definitely want to reach out to them for those details. Next is going to be a forbearance. And that's going to be a period of time where you may be able to stop making payments or actually reduce the amount that you are paying for a specific period of time. Now, during approved forbearances, interest is going to accrue on all of your federal loans, no matter what type of federal loan it is. So any accrued interest will be capitalized after that approved forbearance period. Again, you can choose to make interest-only payments during that time. There are actually two types of forbearances. One is a general and the other is mandatory. With a general forbearance, the loan servicer will decide whether or not they're going to grant you the request. So some examples of when students have used general forbearances include maybe they're experiencing some financial difficulties, or they have medical expenses, or maybe they've had a change of employment. Those could be examples of when you might consider using a general forbearance if you need to. With a mandatory forbearance, if you meet the eligibility requirements, the loan servicer is required to grant you that forbearance. So some examples of when you might use a mandatory forbearance could include things such as, a national active guard duty, or maybe you're doing your dental or medical residency. So those could be examples of when a mandatory forbearance would be used. Now, the one thing, it's important to note that you continue to make your student loan payments until you have been able to verify with your loan servicer that your loans have been placed in an approved deferment or forbearance status. So keep in mind, if you stop making payments before that deferment or forbearance has been approved, you could become delinquent. So that's why it's important to make sure to contact your loan servicer and verify that you have been placed in those approved deferment or forbearance statuses before you stop making payments. If you have a private student loan, definitely check with your loan provider or loan servicer to find out what sort of deferment and forbearance options might be available. Those do vary depending on who you took out your private student loan through. So let's go ahead and go to the next slide, and we're going to dive a little bit deeper into the different types of repayment options that are available for different types of student loans. So there are several options available to really help you with repaying student loans. And on the next two slides, we're going to go through in detail some of those requirements, the repayment options that are available. We'll talk about some of the eligibility programs that are available, the different types of loans that are available for the different repayment plan options. One of the things that we do want to share also is that there is a great tool that you can leverage on the federal student aid site, and that's something we shared earlier, the studentaid.ed.gov link that was shared with you earlier. There is going to be a tool that's called a loan simulator, and that's going to be a great resource for you to be able to get an early look as to which repayment plan you may be eligible for and get an idea as to what those estimated monthly payments would look like. So definitely, if you have federal student loans, take a look at that loan simulator tool on the federal student aid site to get some additional information about what potential repayment plans you could look at and what some of those estimated payments might look like. Now, there's several options to help you with repaying student loans, so we're going to go through on the next slide and talk about some of those options that are going to be available. So in the next slide, we'll see three different plans here, and I'm going to share some high-level overview information on the different plans. One of the things that's important to remember is that although you may select or be assigned a certain repayment plan when you first begin repaying your student loans, do know that you can change your repayment plan at any time. So what you'll want to do is definitely contact your loan servicer for additional information and details if you find that the payment plan that you're in right now is really not working and you need to figure out a different option. So for each payment plan, you'll actually be able to see the different federal loan programs that qualify for those plans. So we're going to start on the left-hand side with the standard repayment plan. So with the standard repayment plan, payments are actually going to be fixed for a 10-year repayment period. Overall, this plan would definitely save you money over time because the monthly payments, might be higher, but you're going to be paying off the loan a lot quicker, so you'll be paying less interest over the time. Now, with the standard repayment plan, it's going to be taking basically the entire amount that you have outstanding in your student loans and split that up into equal payments for up to a 10-year repayment period. Next is going to be the graduated repayment plan. Now, under the graduated repayment plan, you're actually going to start out with smaller payments, and then they're going to increase every 2 years. Similar to the standard repayment plan, you'll be given a 10-year period to pay off the loan. Now, the last plan that we will look at is going to be the extended repayment plan. These are specific federal loans that qualify for extended repayment plans. Under this plan, you could potentially have up to 25 years to pay off the loans, which means you would be paying more interest over the long term, but based on the amount that you've borrowed, it's giving you a little bit more time to pay those off. Now, you can select to have the payments set up in a standard or graduated type of a plan. So with the standard, again, they just take the full amount, split it into equal payments under that 25 years, and then the graduated will start out with smaller payments on the front end and will increase over time. Now, with the extended repayment plan, you will have also need to have borrowed $30,000 in outstanding federal student loan debt. So you would have to have, for example, $30,000 in your direct loan program in order to qualify for the extended repayment plan. So the next slide, we're going to cover different types of payment plans that are going to be based on income. So most federal student loans will offer income-based type of repayment plans, which fall into two categories. One is going to be the income-sensitive repayment plan, and the other four are going to fall into a larger umbrella, which is called the income-driven repayment plans. So we'll start with the income-sensitive repayment plan first. This is going to be based on your annual income, and for this plan, you will have need to have borrowed your federal student loans under the Federal Family Education Loan Program. Now, you will have a loan repayment term of up to 10 years under this plan. The other ones that you probably hear a lot more about at your school, or maybe you've heard about it in the news, are going to be those income-driven repayment plans. Definitely you want to reach out to your loan servicer regarding details and information that may need to be provided for any of those four income-driven repayment plans on the slide. You'll be required to recertify your eligibility for each of these programs every year that you're in the program. So you'll be hearing from your loan servicer each year about recertification of eligibility for these programs. And again, your loan servicer is going to be a really great resource if you are exploring one of these plans to figure out exactly, how do I qualify and is there additional information that needs to be completed. So let's go ahead and start with the Income Contingent Repayment Plan, or ICR for short. So under the Income Contingent Repayment Plan, you must have taken out your federal loans under the Direct Loan Program. We'll share that your payments and how much you will be paying every month is something that's going to be recalculated again each year by your loan servicer. So they are more than likely going to ask you for additional documentation when you initially sign up for the plan and each year that you are being recertified for eligibility. You can have up to 25 years to pay these loans. Next will be the income-based repayment plan. Under this plan, you must have taken out your federal loans in either the Federal Family Education Loan Program or the Direct Loan Program. Payments, again, are going to be recalculated each year, so you do have to demonstrate eligibility for that loan repayment program. And repayment can be up to 20 or 25 years, depending on when you took out your loans. Moving on to the pay-as-you-earn repayment plan. Under this plan, you must have taken out your federal loans under the Direct Loan Program. Again, payments are going to be based they're going to be recalculated each year, so you're going to have to demonstrate eligibility for the program, and your repayment term can be up to 20 years. Now, the last repayment plan is going to be the revised pay-as-you-earn repayment plan. With this plan, you must have taken out your federal student loans, again, under the direct loan program. Like the other 3 repayment plan options, you have to demonstrate eligibility. So your eligibility for the program will be recalculated each year, and your payment can change based on that recalculation that's done by the loan servicer. And your repayment term can be either up to 20 years or 25 years, depending on if your loans were taken out for undergraduate or graduate studies. Now, under all 4 income-driven repayment plans, any remaining balance may be forgiven if your loans aren't fully repaid at the end of the repayment period. However, you may have to pay income tax on any amount that is forgiven. So you'll definitely want to consult with your tax advisor for additional information with regards to that forgiveness and how it would impact you. Also, reach out to your loan servicer for additional details regarding any of these income-driven repayment plans and also regarding the income-sensitive repayment plans. Now, for those of you who maybe are interested in pursuing public loan forgiveness, there is a tool on the federal student aid site called a Public Service Loan Forgiveness Help Tool. And it's going to be on the same site that has been pushed out before, so the studentaid.ed.gov site. This tool is going to be really great because it's going to help you to understand more about the Public Service Loan Forgiveness Program and what actually you're going to need to do to be able to participate and possibly have your loans forgiven. This tool is going to really be able to help you assess whether your employer qualifies, whether your loans qualify, can help you decide which form to submit, and you can use this information to also help you with other documentation that may need to be provided to the loan servicer. So what you want to do is make sure to contact the loan servicer for additional details around the public service loan forgiveness. You'll want to make sure that you've completed all the appropriate paperwork, that you're enrolled in the correct repayment plan, that your employer qualifies, and if there's any additional information that needs to be provided to your loan servicer, that you have that submitted. You may also want to consider checking with your loan servicer on a yearly basis to ensure that you are on track and meeting all of the requirements for that public loan forgiveness. So let's go ahead and move on to the next slide, and we can touch on private student loans and just want to cover some information about options and features that are available. So typically with your private student loans, repayment terms can range from 5 to 20 years. Really, it's going to depend on the lender, your program of study, and how much you borrowed. Usually you're granted a 6-month grace period and limited deferment options after graduating or leaving school. Some of the loans may require you to go into repayment immediately, but again, this is going to depend on the lender, and so you're going to want to check with them to find out specifics regarding the grace period, the deferment options, and the repayment plans that are available. Some lenders also offer a loan modification program, but with private student loans, it's again going to be different because it's going to depend on who the lender was that you borrowed your private student loan through. So you'll definitely want to check with them regarding specifics. You can also use, again, as we mentioned before, the annual credit report to find out some more specific information about who your loan servicer is and who you should be contacting with those specific questions. So on the next slide, I know we've gone through a lot of information so far, so wanted to take a moment before we move on to refinancing and consolidation to recap some of those resources and some of the information that we've discussed so far. So earlier on, I talked about the National Student Loan Data System, or NSLDS for short. This is really going to be a great resource for you that can provide information about who your loan servicer is, which federal student loans you had, the interest rate on those loans, how much you borrowed, where you took them out, the types of loans, the current status of those loans. So again, there was an update to the link. I know we pushed it out earlier, so it's nsldsfap.ed.gov. Next, you want to make sure you stay in contact with your loan servicer or loan provider. Keep them informed of any updates that may go on. So maybe you have moved from on-campus to off-campus, make sure they have that updated address. If you have changed your email address, maybe you're using your school email address and now you want to have your personal one, make sure you make all those changes with your loan servicer. You can also reach out to them if you have any questions about the different types of repayment plans once you are in repayment. Any questions that you have about your loans, you can reach out to your loan servicer, regardless if they're federal loans or private loans. Lastly, for additional information about what we discussed, because I know we went through a lot of information about the different types of repayment plans, you can visit the federal student aid site at studentaid.ed.gov. And this is going to be, again, a really great resource for you because it'll have all of the information about the different types of repayment plans for federal student loans, the different types of federal student loans, how they work. There'll be information about your loan servicers. You'll be able to find the loan simulator tool that I talked about earlier, as well as you'll be able to find out information about the public service loan forgiveness help tool. So that's going to be a really great resource for you to have as well. So let's go ahead and move on to talking about student loan refinancing and consolidation. So when you're exploring consolidation, you may want to consider the following questions when doing your research. Really think about, why are you considering refinancing or consolidating your student loans? What types of loans are you thinking about refinancing or consolidating? Should you really consider refinancing or consolidating your loans, or is it a matter of exploring a different type of repayment plan to help with your current situation? And then looking at, how does it change the terms of your loan, and what is that interest rate going to be if you refinance or consolidate your loans? So over the next couple slides, we're going to talk about a few types of refinancing or consolidation programs that are available for student loans. So let's go ahead and go to the next slide, and we'll start with the Federal Direct Consolidation Program. So this is offered through the federal government, and it allows you as a borrower to consolidate your federal student loans only. Now, reasons that a borrower might consider consolidating their federal loans could be things such as reducing multiple payments down to one. It could be lowering the monthly payment, or maybe extending the length of time to repay the loan. We'll let you know, with consolidation, you could go up to 30 years. So I know earlier we were talking about some of the repayment plans that give you a little bit extra time. Consolidation gives you even a longer period of time. But do know, over the longer you have, the more interest you'll pay over the long term. Now, when you are considering consolidation, you want to make sure to do your research. Ask the questions of your loan servicer. The federal student aid site is going to have information as well on there about consolidation, because one of the things with consolidation is you may lose some of the benefits associated with your original loan terms. So again, you want to make sure you do that research, understand what changes, if any, would occur to your federal student loans by doing a federal consolidation. So you can definitely visit more information. We have the link here. This will take you directly to the consolidation page, but you can also just go to studentaid.ed.gov and then look at the consolidation information from there. I know it's a little bit shorter. So again, consolidation is going to be one of the options that will be available to you that you can explore if you can't find the right repayment plan. So let's go ahead and go to the next slide, and we're going to touch on private student loan consolidation. Now, with private student loan consolidation, it's offered through private lending institutions. And this is really going to allow borrowers to refinance or consolidate. It could be private only, or it could be a combination of federal and private student loans into a new loan. Now, reasons that borrowers or students might want to consider consolidating or refinancing their loans into a private student loan could include simplicity. So maybe it's combining multiple student loans into one student loan. It could be potentially to lower the monthly payment. Again, extending the length of the repayment period. But do remember that you will pay more interest over time with this option. Some additional points to remember: when you consolidate, again, I know I mentioned that on the last slide, you may lose certain borrower benefits. For example, we've covered several deferment, forbearance, repayment plan options that are available under the federal student loan program. When you look at doing private student loan consolidation, you would lose some of those benefits. So this is where you're really going to need to do your research if you are seriously considering this, to explore, what happens if I do a private consolidation? How does that change my loans, especially if you are exploring doing something like a federal and private student loan combination? So just do the research, ask the questions, ask your loan servicer, how is this going to change my loans? What sort of deferment forbearance options will I have? What types of repayment plan options do I have? Just make sure you have all of the information, all of your questions answered before you do any type of consolidation, because keep in mind, once you consolidate your loans, you can't undo a consolidation. So it's pretty
Casey?
final. Yes.
I have a question. We have several, but I'm just going to ask this one right now since you're talking about consolidation. So the question is, if I'm still in school working on my PhD, can I consolidate my existing loans without losing my deferment?
That's a great question, and I'm glad you brought that up, Sylvia. So you do have to be very conscious of when you consolidate your loans. And the reason being, and I'm glad you brought that up, and I know why you brought that up, because when you consolidate your loans, you go into repayment right away. So you will lose any sort of grace period that you had on your student loans that, you would have had you not consolidated. So one of the main things with consolidation is you do go into repayment right away. And if it is a private consolidation, you might not have some of those deferment options that you would have under the federal program. So you need to be very careful when it comes to consolidation, and timing is going to be one of those things that's critical. Because when you have federal student loans, you do have that grace period that we talked about when you're in school before you actually go into repayment on your loans. If you consolidate while you're in school, you're going to lose that because you would go into repayment right away. And depending on if it's a federal or private, you might not have some of those deferment and forbearance options that would have been available had you not consolidated. So again, this is where it's going to be really key to make sure you do your research, but it's especially important when it comes to the timing as well. And Sylvia, I don't know if you want to add any additional thoughts to that.
No, you answered it perfectly, and I'll follow up with a comment on the email. Thanks.
Perfect. Thanks, Sylvia. So want to get in, and that's actually a perfect segue because we are getting really close. If we want to go ahead and go to the next slide and some of the resources that are available, we've really enjoyed sharing the information with you today, and do know that Wells Fargo, that we're here to help if you have any additional questions. And speaking of questions, Dewey, I know Sylvia, you had just asked one, and now we can open it up and see what other questions our scholars have around some of the information that we went through today.
Yeah, Casey, thank you very much. I mean, a ton of information there. And scholars, we promised you we were going to push you lots of links, and we followed through on our promise. So please bookmark those pages, even for our students that are just beginning your college experience now. You're going to need these later on. And a couple of things that kind of stood out for me, Casey and Sylvia. And Sylvia, I do want to go to you for some of the questions that you have, but the importance of having that two-way conversation, Casey, with your lender, knowing who they are, contacting them. It sounds like that's one of the real keys, just keeping that dialogue open so you know where you stand as a freshman, as a sophomore, as a junior, and certainly as a graduating senior. Do you want to talk any more about that, the importance of that communication?
Yeah. It really is important, and I can't stress enough, and I know Sylvia feels the same way because we actually have both worked on the financial aid side of the business as well. Sure. But from my experience, having been a student loan borrower, I'll just share a story and how important it is to be in communication. So when I first graduated, and I won't date myself by telling you like the interest rates and how long ago that was.
It was just last year, though. You just graduated last year, right?
Of course. It was just last year, or maybe it was 2 years ago, 1 or 2 years ago, not too long ago. But I was actually in repayment on my student loans, and, the payment was great, but I actually did consolidation, and the reason I had done consolidation, and this is where it could potentially date me, is at the time I took out my student loans, interest rates were variable. My federal interest rates were variable. So they were changing every year. So for me, I did consolidation because I wanted to lock in my interest rate. So I went through all the paperwork, did that, and I noticed that it was the opposite. Like I was paying more every month. So I didn't let it go by. I picked up the phone, I called my loan servicer, and I was like, I don't understand this. I consolidated my loans. It's a lower interest rate. I don't understand why I'm making a larger student loan payment than I had prior to consolidating my loans. So it was important. I had that open dialogue. We got it all fixed. My payment was lower. But, yes, this is where it's going to be important to maintain that conversation. The other thing is you want to remember that all of this is reported on your credit report. And I know Sylvia and I will sometimes joke and say there's never, not joke, but we'll talk and say there's really never a reason why students should default on their student loans. And the reason being is that there are so many options when it comes to, for example, your federal student loans. So you have income-driven repayment plans, you have deferment options, you have forbearance options, a lot of options that aren't available on, if you think about like personal loans. The key is going to be to have that dialogue with your loan servicer, because they're not mind readers. So they don't know what's happening with you unless you talk to them. So don't just say, I'm not going to deal with it. They're there to help you, and they want to help you. You know, student loans are reported on your credit, so you want to take care of that. And just having that dialogue is so important, because they can find the right solutions that can help you make those student loan payments more manageable.
Ladies and gentlemen, that's Casey Galindo. You see why we bring her to this meeting every year. Hey, Sylvia, I've got another one that I want to pose, and I do want to hand it to you. We certainly would be remiss in our duties if we did not mention the impact of the pandemic. There were students that may have been impacted. Maybe they had to take a semester off. Maybe they are now working, taking a break. What do students need to be thinking about during this time, ladies? And Sylvia, I'll ask for you to comment on this, and Casey as well. But what do students need to be thinking about if they've taken some time off, or if they're ready to get back on campus but need some help in other areas? Give them some encouragement here in those areas, please.
Sure, Dewey. That's a great question. Matter of fact, one of the questions that we had in the chat box was around this, and I was going to have Casey address it. But, you know, some of the things that you should be thinking about really right now is, you know, it's tough right now. And also, you know, what can you do, number one, to earn income? There's a lot of things, you know, we talked about this in another session that, you know, you can do some things virtually that you could be earning income. We showed you or gave you the link to the scholarship information. Another link, Dewey, if you don't mind pushing out, is TFS. So that's our tuition funding resources scholarship. One of the questions that came up was, you know, this scholarship basically was for undergraduate students. What about for postgraduate? And so please look at that tuition funding sources link. That's a scholarship database. Put your information in there. It will give you a list of scholarships that you're eligible for. That is a absolutely great resource for you to have. But then, Casey, I'll ask you this. One of the questions was around taking a gap year and how that might impact their student loans if they graduated undergrad, take a gap year before they go to graduate school. How would that impact their student loan repayment?
That's a great question. So if you guys remember in the presentation, we talked about a grace period. So that window of time, that 6-month window of time before you go into repayment on your student loans. When you take out loans, for example, that question that you posed, Sylvia, with undergraduate loans, you'll have 6 months before you actually go into repayment. And during that time, if you plan to take a gap year, you're obviously going to go into repayment on those undergraduate loans. Once you enroll in graduate school, what you can do is you can reach out to your loan servicer, you know, find out what additional paperwork. But if you are, for example, if you have federal loans and you enroll in graduate school at least half time, you could explore that in-school deferment. There's an in-school deferment. So you could look at postponing, pausing that payment on those student loans while you do your graduate studies. Now, when you complete your graduate studies and you graduate, you're going to go into immediate repayment on those student loans after graduation. And the reason being is that you will only get that 6-month grace period once on your loans. So if you take that gap year, obviously you're going to take longer than the 6 months, so you'll go into repayment on your student loans. But do know that once you enroll into graduate school, they do have in-school deferments that are available. For federal loans, you have to be enrolled at least half time. So you could potentially put those into deferment, but do know once you graduate, you will go into repayment immediately on those undergraduate loans. Now, if you decide in graduate school that you are going to borrow, for example, federal loans again to help pay for school, you will have a 6-month grace period on those graduate loans. You won't have it on the undergrad, but you will have it on the graduate student loans. But great question.
Okay. Here's another question, Casey. Do they set up how much you pay every month on your student loan, or do you get to choose something like a minimum payment or a maximum? How does that work?
So they will have the loan services will send you information, and you'll have at least a minimum monthly payment that's due. But they are going to send you your bill. So, for example, if we were looking at federal student loans and you were signed up for the standard repayment plan, then what they're going to do is they're just going to take the entire amount of your student loans that are outstanding, and they're going to break it up into equal monthly payments, and you will pay those loans off within 10 years. Now, it could be shorter if, say, you borrowed, $5,000 and that's it. But if you borrowed, for example, $30,000 or $25,000, $30,000, automatically they're going to put you in a standard repayment plan. And you do have other options. So we had talked about, if we go one more slide back, Dewey, the slide before that, you could have leveraged maybe an extended repayment plan, because that one will give you 25 years to pay off your loans. So it would give you a longer period of time. So it's going to be automatic. The loan servicer is going to set that payment amount. There will be at least a minimum amount. But this is going to be where you can have more of that active dialogue with your loan servicer. So talk to them. They're going to send you correspondence before you go into repayment that will give you an idea as to what those monthly payments are going to look like. But you can also leverage the loan simulator tool that we discussed in the presentation earlier. That's going to be a great tool that even right now, you can start looking at the different repayment plans. You can see what's available as far as what do you qualify for. Do you qualify for any of the income-based repayment plans? And it will allow for you to get an estimate of what those student loan payments are going to be. And that can help with your conversation and your selection of a repayment plan that would best fit your needs. But do know there is at least a monthly payment, but your loan servicer is going to be the one who determines that information. Again, do know that you can change your repayment plan at any time. So you will be automatically put into a standard repayment plan unless you select something else as far as maybe a graduated, extended, or if you're exploring any of the income-driven ones.
Okay. Casey, this next question is about Parent Plus loans. Do Parent Plus loans lower my parents' credit score, or is this, or only if I begin making payments on time? So basically the question is, will a Parent Plus loan lower my parents' credit score if I don't make the payments on time? And so talk a little bit about Parent Plus loans and repayment. Casey?
Yes, I'm here. I'm sorry, Sylvia. Yes, so with the parent loans, they immediately go into repayment on the loan. They do have an option to postpone those payments while you are in school. For if you're in school for the 4 years, they can postpone those payments. But it's really to say whether or not it's good. I mean, you definitely don't want to be delinquent, because being delinquent on any type of credit product will reflect on your credit report. But your credit report actually takes into consideration several different factors, not just, did you borrow a loan, but they're looking at your payment history. It's looking at, what kinds of trade lines do you have? Do you pay your payments on time? One of the things that, we always say is pay your payments on time every time, because that's going to be a huge factor in your credit and when the reporting. But with the parent loans, they are in your parent's name, so it is definitely going to be under their credit. If you are repaying, because maybe that was the arrangement that you had, you definitely want to make sure you're paying those bills on time every time, because that could have an impact on your parent's credit score if you don't pay those bills on time every time. So, definitely, but there are several factors that go into the credit score. And it's not, it's definitely paying on time every time is going to be a key factor. The credit history, the length of time that maybe you've had credit cards, for example, the different types of credit products that are out there that have been leveraged. So there are several factors, but when it comes to payments, whether it's the parent loans or any student loans, the key is going to be to make sure to pay on time every time, because that can be a huge, it could have impact on your credit report. And Sylvia, I don't know if there's anything you'd like to add to that as well.
No, you answered it perfectly. The bottom line is with the parent loan, like she says, you go into repayment right away. Anytime talk to your parents about this. But if they're having any issues, just like with the regular student loan, let's contact the servicer. Because what I will tell you is that when I worked in the financial aid office, like Casey said, student loans are different than other loans in that the loan servicer is there to assist you. So you don't have to run from these bills. Make sure that you contact them and set yourself up on the payment plan that works for you, because I will tell you, if you don't make payments, it impacts a lot of things, including perhaps your employment, because employers check to see what your credit score is. They want to know how you handle money, believe it or not. So that's important. And also, it's extremely difficult to try to clean up once you've defaulted. It's easier to set yourself up on a repayment plan, talk to your servicer, than it is to try to get out of repayment and try to repair the damage that it's done to your credit, which, like I said, can also impact other parts of your life. So, you know, try to remember as much of this information as you can, but the bottom line is contact your servicer. I'll turn it back over to you, Casey, and then to Dewey, but thank you, guys. This has been fun.
Absolutely. Right. Thanks, Sylvia. And we'll hand it over to you, Dewey.
All right. Well, ladies, thank you all for a very, very great presentation, and I think tons of action items. And scholars, we shared with you the information, again, for our distinguished panel a little bit earlier. So please feel free to reach out to them, catch up with them on LinkedIn, and we can certainly continue the conversations from here. And again, to anyone that submitted questions either in advance or real time with us today, thank you for submitting those. And we will get back to a response to you, even just to say that we covered the topic that you brought up with things here for today. So, hey, listen, we promised you some additional links. So as we're closing out here, we're just going to give you some final reminders around things. Please remember that over the next 72 hours or so, we'll send back the playback details for today. So stay tuned for that information. Please share this information with others on campus. Share this information with friends or family members that are working their way through their student debt right now. This information, I think, can be very, very helpful. So pass it along to others that you think could benefit from it. I also want to go ahead and launch for you here just a great survey link. We always love to put together a survey together, feedback from you all on how these sessions are going. So please, 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 please take a look at that survey link. We know that in some instances the link may be blocked in certain areas or within certain firewalls. If by chance it's blocked for you, please contact me, contact Sylvia, contact Casey, and certainly give us the feedback directly. But again, that survey link should be coming up for you, and please know that we really do appreciate your comments and feedback relative to what you heard from the team today. As a reminder, again, we mentioned the playback. You'll see the password here that you'll need to use to access that. Never say it over the phone, but you'll see it here on the screen, and one certain that you can share with others as they need to. So, team, you know, we've completed 10 webinars for the year. This is number 10. We've got 2 more on tap between now and the beginning portion of November. We heard credit mentioned several times today, several times throughout the conversation. So we would really encourage you to join us in October on the 22nd for a discussion that we're going to have about building responsible credit and why credit matters and why it's important and maybe why it's not important. So our buddy Bonnie Wallace and the team from our social impact and sustainability group and some external partners will be coming in to share for that dynamic discussion, hour-long meeting there for that one. And then we'll wind the year up with one of our always fun topics, digital natives and social media smarts. And so come to this call. You'll be able to get information about some things that you're doing especially well from a social media perspective, and may be able to even leave that call with some suggestions on things that you can do to improve what you're doing from a social media perspective. We referenced it a little bit earlier. Again, the link here for the survey, we'll push that just one more time in case folks have not had that come across, but that'll come up there for you here momentarily, and you can certainly, again, go ahead and complete that for us and just give us feedback on your thoughts relative to what we shared for today. And again, I do want to just reference again the Student Impact Scholarship. Please remember, scholars, that you must apply by October the 2nd, and the deadline is, I think it's in the middle of the day or in the early evening then. So you'll see all of the details on the website relative to that. That link is also coming up for you here now. Please go ahead and get your applications completed. You can submit those again either through some storytelling, through an essay, and or through a video that you have the ability to submit there. Really just talking about any challenges, candidly, that you face relative to the pandemic, and also some of maybe the things that you've been doing to keep your community or keep your family kind of up and going in a good way during these times. And so please take a look at that. You can share that information, any of the links that we're passing across. Just remember that you can share those in your social media handles. You can push them over to others. You can share the information with any and everyone that may be interested in taking a look at it. And as I close today, I'm going to close kind of where we started off, just by, again, resharing the link that we referenced earlier around our D&I commitment. And I've been here at the firm for 22 years, and I would say that Wells Fargo is a company and is a firm that is committed to diversity and inclusion and also winning the best talent, ultimately to come and work for our wonderful company. And so really want you to read this important message from our CEO, and then again, open to having additional discussions with anyone that wants to learn about my experience. I'm sure Casey and Sylvia would also be willing to share firsthand their experiences with the firm and how they've kind of grown and developed. And so again, this information is available to you. Please share this also with others that may be interested in learning more about D&I and specifically the message from our CEO, Charlie Shaw, that was issued earlier this week. All right, with that said, team, we're going to remind you to join us again just a couple of weeks from now on October the 22nd for an important discussion around building responsible credit and why credit matters. Come join us. Please share the information with other scholars that may be interested. I want to close by, again, wishing everyone continued success throughout your academic semester. Please continue to stay safe where you are, whether you're on campus, virtually, or doing a hybrid kind of a program. Please do everything you can to work hard. Start looking for internships. We've talked about some of those things on prior calls as well. But go ahead and start looking at some of those options that are available. And, of course, Casey, Sylvia, thank you all so much. And Kavita and Michelle, thank you all for helping us have a really, really great call today. We'll turn the reins over to you all to actually close us out from here.
Hey, Dewey?
Thanks all.
Yes. Go ahead.
I'm sorry.
Did
a
you
couple of final,
please.
Yes, just some final questions that are coming in regards to
the webinar.
Okay, one
Go
question
for
is they want to know is there a password. So I wasn't sure if the scholars needed their own password. And then also they want to know, is there a way to watch this broadcast again? So I want you to reiterate that.
Yes.
Thanks.
I'm happy to do it, Sylvia. I can bring it back up. So yes, in the next 72 hours, scholars, the exact link that you use today will be the one that you access to actually listen to the playback of everything. So again, you'll get an email from us now that you've registered, and you'll have the ability to go in. And again, that password is here on the screen. You'll see that information. That will also be included in the email that we send out. I never say the password, but it's pretty simple, I guess you would say, and it's here there on the screen for you. So go ahead and take a screenshot of that so you'll have that information. But yes, you absolutely have access to the playback. And as we said earlier, when you're sharing this with others, go ahead and use that hashtag WFCBeyondCollege. Again, hashtag WFCBeyondCollege when you're posting this in your social media handles or sharing it with others on campus. We want these webinars, not just the one that we're doing today, but all of the content that we've covered over the course of the year to be beneficial to folks. And so just remember, you can go back and you can access any of the webinars that we've done up to this point of the year. I'll actually go ahead and push that link over now. So Sylvia, thank you for mentioning that. So you can access this, and again, it's the exact same password, and literally when you go to this landing page, it's got the password listed right there, so you can't miss it. You can't miss it. Sylvia, I love that one. Thank you for that shameless plug so I can talk more about the webinars. You know, they pay me double when anytime somebody listens to the playback. they pay all of us double anytime those happen. No, we're happy to provide them. So, again, great information. Scholars, have a great rest of your semester. If there's anything we can do to help you out, please let us know. And Kavita and Michelle, we'll hand it over to you all to close this out from here.
Thanks to all our participants for joining us today. Please take a moment to complete the survey. It should appear on your screen momentarily. We hope you found this webcast presentation informative. This concludes our webcast, and you may now disconnect.